Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Atmir with a weekend special as far as the bulletin board here is concerned. We're looking at the top all-share rises of the merry month of May. The thing that distinguishes them really are rises which look as though they may continue to rise. First is AO World. Here we've had this wonderful, almost straight, slow grinding by to the upside, above the 20-day moving average at £1.16. That's the pink line there, and above that, looking towards the top of a rising October trend channel as high as £1.80, hopefully by the end of June. Future is next, and here we see a remarkable turnaround as well. We had that bear trap gap reversal, I suppose, that was in the middle of March, and that gap remains in place. Over the course of this week, we've broken above the 200-day moving average at £12.18, and while we're above that, best case scenario over the next month or two is up to £25, which is the top of a rising trend channel from January. On to Forexpo, which didn't expect to see here, but here it is. One of the best movers of the past month. Here you can see that shares had a sort of, I suppose, nearly 6 weeks of consolidation at or just above the 50-day moving average, around the 140, 145 area, but having cleared the 200-day line around £1.50 in the middle of May, they've started to accelerate, and view at this stage is that at least while we're above the 20-day moving average at £1.60, the upside here could be as high as £2.10 over the next month or so. So still plenty to shoot for there. Games Workshop, I know, has been a seasonal, a perennial rather outperformer, but here for May we've seen the shares really take off, breaking, I suppose, the that late 63.30 peak of April, and gapping higher just a few sessions ago as well. Current situation is that we're going into a 50-day, 200-day golden cross, and the run-up to such cross is normally regarded as the strongest part in the cycle, and that seems to be the case here. Looking at in terms of what the upside could be, the top of a rising trend channel from November at £10 looks to be the destination for the stock, especially while we hold above that old February peak at £73.75. So reasonable risk reward even from current levels. On to Halfords, which I think I remember there's a £50 repair voucher for bicycles, which has obviously helped the situation no end this week in terms of the fundamentals. But a broadening triangle there, heading towards £2.70. Beautiful mid-move consolidation here. Extended bull flag just above the 200-day moving average at £1.49, but holding above that 20-day line at £1.68, and the April uptrend line, that £2.60, £2.70 target could be seen as soon as the end of next month. Stock which made a lot of people happy midweek this week was Marston's, with that vertical move through the 50-day moving average. Currently we're in what looks to be, well, hopefully is a mid-move consolidation, with the next target as high as £1.10 or £1.20. Any dips at this stage towards that midweek low, 54 pence regarded as a buy opportunity, and probably the stop loss on this back below the 50 pence level, or using the 20-day average at 47 or 48 at the moment as a trailing stop loss. I did note on Twitter that one or two brave souls decided that it was a good time to go short of Ocado. Judging by the daily chart, that may not be the case, and despite the odd day on the downside. The reason for saying that is that it's possible to draw a rising trend channel from the end of February like this, and at the moment it looks as though we're going to hit the top of that channel, that February resistance line, up at £26 or even £27, while there's no breakback below the floor of the channel and the 20-day line at £20.38. So let's see how the bulls and the bears do in that situation. Lots of noise on the following stock. I'm not quite sure why there was so much noise on this, but SIG Group does certainly have its fans on Twitter and beyond. I thought it was a bit of a slow mover, so not that excited about it. But we've got a couple of scenarios here. I suppose the best one would be a trend channel that I'm drawing like this from the middle of March. Top of the channel heading for 42, 43 pence, or maybe even a bit more, while we hold above the 20-day line at just under 26 pence. The 20-day line, I think, would be a good stop loss on the bull argument at the moment, especially given the way that we are still within, looking at a chart which is has very heavy bear signs on it, especially over the period going into March. So the rebound here, I think 40 pence would be certainly a bonus in terms of the struggles that the shares have had in the recent past. On to TUI, which is clearly a bet on the revival in the travel industry. Already seen the shares hit £6.28 at the best intraday during the week. Current situation is interesting in the sense that we've got the old resistance area, neckline resistance around the £4 mark looming again. We've also got the 20-day line, the £3.67. Let's say the 20-day line looks to be the best stop loss on the bull argument for anybody buying towards the £4 level or maybe just below. A possible target in terms of new resistance coming in, it would be towards the 370, 380 pence area. Support coming in, and then using the 20-day line as support after that particular situation. As far as what the trajectory of the stock is, it appears that we're in a broadening triangle like that, and really there's a possibility that we've seen the best of this rally for the near term. Finishing off with a less hairy situation, ZAR. Here you can see that amazing recovery, I suppose, from the end of March going into the beginning of April, and also amazing the way that the shares have apparently sort of topped out here near the 60 pence zone. As far as the price channel that you could draw accompanying all that, one would be looking, I suppose, at a situation where we could still hit up to the low 70s while we hold the floor of the channel at 57 pence. So maybe worth chasing for enthusiasts, given the way that so far there hasn't been too much volatility on the journey higher. That's it from me today. More updates on Monday.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.